Good morning, everyone. Happy Thanksgiving week. Glad you're all here. My name is Veronica Lopez. So welcome to PACE's Financial Bootcamp for Small Business Owners, the ABCs of bookkeeping and accounting. Business savvy starts here. So thank you all for being with us today. Today's featured speaker is Lorna Whitaker. She's been a longtime supporter of PACE. She's been with us for over 3 years. Her business Beyond the Shoebox by Money Smart Business Solutions provides expert advice on accounting, bookkeeping, and all things financial. So I'm just going to give you an introduction about PACE for those of you who are new to PACE. We would love to know who's in the room. So it'd be great. You don't have to put your name, but if you could put type of business you have and what city you're hailing from, that'd be great just to give us an idea. And also to try to cater the presentation and answer the questions similar to the type of business or industry that you work with. Thank you. So for housekeeping, you're on listening mode in a webinar. If you want to raise your hand to speak, let us know. But for the time being, everyone is on mute. You can enter questions in the Q&A. You can also enter questions in the chat box. We are going to be taking questions along during the presentation. Today's webinar is being recorded and it will be posted on the e-library as well as sent out to all of today's attendees. We really encourage you to complete the survey at the end of the webinar when the webinar closes, and this because it helps guide our programming. For example, Larna's workshops is actually one of our top workshops that we provide and that people attend. So we love to hear that feedback, like what's working, what's not working. So a little bit about PACE. So PACE has 5 departments. We specifically work with the Business Development Center, and I oversee a program called the City of Los Angeles BusinessSource Center for the downtown area, Pico-Union Westlake region. We offer one-on-one consultations. You can meet with the counselor, either counseling or procurement, which is contract support for those of you interested in private or government contracting. We offer entrepreneurial training program, which will start February 2025. It's a 10-part session is to help those who are either startups or an operating business. All of those workshops are live or in person, and you can reach out to me if you'd like to learn more. And of course, we continue to offer expert courses from our speakers, just like Lorna, who have expertise in their field. And then lastly, but just as importantly, is our, oh, I'm sorry, 2 more. Small business financing. We offer loans as small as 500 and as large as 350,000. We also help package loans. We are a CDFI, Community Development Financial Institution, which traditionally when someone applies for a bank, they're usually turned down because they don't have the minimum 3 years of tax returns or 3 years experience. So with the CDFI, it's a little bit more flexible, because of the funding and where it comes from, and the fact that like the SBA, the Small Business Administration, is trying to encourage small business lending. And lastly, we have through our employment department, we have an employee incentive program for 6 months to help to pay or offset the cost of training a new employee. Okay, reach out to me if you're interested in any of those. These are our upcoming webinars. So the next one is scheduled for employment law for small business with our pro bono attorneys, Bitsadek. It's scheduled for December 4th during lunchtime. And then, of course, our next and final workshop with the Financial Bootcamp for financial statements. It's scheduled for December 10th. You can feel free to scan the code and it'll give you all of our upcoming webinars. So with that, now to our main, oh, I'm sorry, I'm not sure why it says that. And now to our main presenter, Lorna Whitaker. She's small business owner, of Business Beyond the Shoebox by Money Smart Business Solution. And now here with you is Lorna. Take it away, Lorna.
Hi, everybody. Give us just a second. We've got to get the slide deck going, and we have to get it shared. So let's see here. Oh, it shows that it's up. Good. So share and good. Okay. Okay. we're ready to go. So this is part of a three-part series. This is actually part two of financial fundamentals for small business owners. Um, so it's one of the things I really want you to know is that success is not an event, it's a result. You show up every day, it's a process, step by step. One of the first things that I do need to do for you is I do need to give you my disclaimer, and that is that I'm a small business consultant, coach, and financial skills trainer, growth expert. I'm not an attorney, I'm not a CPA, and I'm not a licensed tax professional. I cannot and do not give legal or tax advice. However, these conversations come up all the time when we are talking about how to run our small businesses. So I provide you the general information and teach you the financial and business skills necessary for having and making money, for creating a profitable, well-run business. So none of us is born knowing this stuff. Be patient with yourself. However, it is all stuff we need to know. I was on a podcast recently and she asked me what did I think was one of the biggest pieces of having a successful business. Well, I got real excited because bookkeeping is the foundation upon which your financial future will be built. So this stuff is dry, and I know I go through it very, very quickly. The thing is it will be recorded. You can go back and sit through it again, and just know that we're talking about the building blocks of bookkeeping and accounting, and you will have to know them. Do not think that you can pass off this work to someone else because you either don't know it, are struggling learning it, okay? Or you think you have other things that are more important to do because you don't. Learning this is going to be fundamental for your future. So learn it. Once you have a good understanding, then you can pass it off to an accomplished bookkeeper, but you're still responsible for looking at it all the time, once a month, once a week, whatever your business needs are. So financial savvy is learned. Nobody's born knowing this stuff. The thing for most business owners is 81% of them handle their business finances themselves. That means they do all the bookkeeping, they deposit all the checks, they send out all the invoices, they can do all the collections, they do it all. That makes it really important that they understand and know how to do it so that it's fast, easy, efficient, accurate. Easy peasy. 66% of small business owners wish they knew more about their money. Guess what? You're here today to do exactly that. And I really applaud you for that. It is so important that we learn this stuff and we carve out some time and learn it because it is all learned. Here's the scary part. Low financial literacy costs small business owners an average of $118,000 in lost profits. Okay. Now, the estimate is that occurs within the first 5 years. Well, that can be the end of your business. If you're losing that much money because you don't understand how the components of money management, of having it and making it and looking after it, this could be the end of your business because businesses only have about 2 years to start hitting their financial targets, those first absolute financial floors before they're out of money. So why do we have bookkeeping? Well, it improves your financial health for the entirety of your life. Today is a great day to get started. It can protect your business from theft or costly mistakes, provides reliable data for making informed decisions. You can't know where to grow, what costs you're going to incur, what revenue to expect if you cannot understand the data and make informed decisions. It creates financial predictability. A lot of business owners feel a lot of uncertainty and anxiety because they don't know where the money is coming from. Okay, so we actually want to use our financial information to start saying, oh, it's predictable that I'll make this much money this month, then I know I'll have enough for my bills. Well, if it's not predictable, then I really should look at what I need to do to make that happen for me. It helps you to budget and manage cash flow, Remember that for business owners, budgeting is about information, okay? It's about managing cash flow. For individuals, it can be a conversation in scarcity. For business owners, it's a conversation about abundance. So, how do we manage our money in cash flow so that we can make more money? Allows you to plan and measure for results. This is part of knowing your numbers, and it makes tax season easier. I was just sharing earlier with our host today that I saved a client $23,000 in tax monies because her bookkeeping was out of whack, and we went through it and we cleaned it up, and all of a sudden yes, her profits went down, but that also impacted her taxes. So we want to be sure that we're paying what we need to pay and no more, no less, and we don't want tax season to be an absolute nightmare for us. And it will save you time. Even if it doesn't feel like that in the beginning, it saves you time. So today what we're going to be covering is we're going to be covering what I call the ABCs of bookkeeping and accounting. Okay, this is the very first place that you're going to start. And I really want you to pay attention here because it's simple, it's fundamental, but it's kind of like cinder blocks if you've ever done any kind of building. They're not particularly sexy, they're not particularly beautiful, but they're strong and they get the job done. We're going to talk about the terminology, the chart of accounts, what that is, how to create one, and some accounting basics and recording transactions. First things first, folks, keep it clean. Now, I don't know what stage your business is in. Some of you may be in the very early stages. Maybe you're even just thinking about starting a business. Maybe you're a few years in. If you're a few years in, you should already have a business checking account. It is one of the first things that we do as business owners. Okay, we get a business checking account so that we can make all our deposits there and that we can spend all of our money out of that. Now, maybe you also are going to need a business debit card or a business credit card. I know for some, getting those business quote unquote cards can be challenging. It's fine to get a personal card, all right, a personal credit card that you use almost exclusively for your business. If there's a little bit of personal expense on that, the IRS doesn't get real upset about it. They know that it's normal, but you have to track it carefully. You have to show that it was a personal expense and not a business expense. If you commingle your funds, you commingle the information, the IRS may take a real dim view on that, and they may disallow those deductions. So keep it clean. A business checking account, have a debit card tied to that, and then get a credit card. I like to tell people that taking care of the financial health of your business is really like learning to ride a bike. At first, you're going to need some training wheels. You need to get some help, get some practice, and then it starts becoming easy. And for some people who like to see their money grow, they like to see what's going on, they actually have a really good time. They really enjoy that financial side of their business. So we step out of fear, we get educated, and we start learning how to do this for ourselves. You will really value that in the long run. So let's talk a little bit about terminology. Bookkeeping. What is bookkeeping? Bookkeeping tracks the transactional detail of a business, the money in, the money out, that sort of thing. And it needs to be accurate for it to be useful. Accounting, that's that big picture view. It's the story that your information is telling you. It's the CFO part, Chief Financial Officer. Whether you're a corporation, an LLC, or a sole proprietor, you are now and always the Chief Financial Officer. You need to know what's going on in your business. Even if you hire an accounting manager or your business grows to the side where you have a formal CFO, okay, you should always stay informed. So your transactions will show you what is really happening, where your money is coming from, where it's going to, and then you can use that information to make informed decisions and what steps to take and when to take them, what you can afford to do to grow, maybe where you need to trim back your sales a bit. Know this, you put garbage in, you're going to get garbage out. So Learn this information so that you can see it if somebody else is doing garbage in, garbage out. So let's talk about the chart of accounts. So there are two basic financial reports that businesses use. They have the balance sheet and they have the profit and loss. Most business owners understand the profit and loss sheet reports fairly well. Okay, there are some nuances that they need to learn that are super useful for them. These reports are for you, the business owner. People seem to think that their bookkeeping is for the IRS. The IRS looks at your books, they look at the financial information. Your CPA puts it all together, or your tax professional puts your tax information together based on what your books are showing. The thing is that your financial reports are for you, the business owner, so that you can run your business, that you can manage your financial health. So the profit and loss or income statement, sometimes it's called an income statement. The names can switch around, but it's always the same thing. That one people understand. The one they don't understand as well is the balance sheet. And because they don't understand it, many of them think that it's not important. And that's not the case. And I'll show you what the balance sheet will tell you, where to look, and why you want to know what's going on in there. So let's look at the 6 building blocks of your chart of accounts and your financial reports. On the balance sheet side, we have assets. These are the things that you own. On the personal side, it's your home, it's your car, okay? It's your computer. Works in a business very similarly. It's the bank money that you have in the bank, it's your inventory, it's any fixed assets that you have, any trucks, things like that. Those are your assets. Liabilities. This is what you owe to other people. You understand that. Most business owners do. This is money that I owe to somebody else. These are my liabilities, okay? Equity. This is probably the one part of a business that business owners just simply struggle understanding. And we're going to cover that in a little more detail this morning. The thing is that equity is an important piece, but there's only a few places where you need to look, okay, to what it tells you. It's more in the posting part where this becomes an important section. We have on the profit and loss side, we have income, cost of goods sold, things that are directly tied to your making money. And then we have expenses. These are the things that we will pay for whether we make money or not. The better you understand these 6 building blocks, the easier your bookkeeping will become. And it's going to take practice of doing this before it gets easy. So let's look at a little bit deeper dive here. Assets, something belonging to you, cash, inventory, furniture, equipment. And you can see I have set up 2 very rudimentary kinds of things that you might see under an assets account in your bookkeeping. You're going to have your bank accounts, payment services. A lot of us have PayPal, Venmo, Square, Shopify, any number of things that are allowing us to get paid. Super important that you have a way to receive money and be able to pay people. And then we have inventory. So for most businesses who buy inventory, they may have a lot of it on hand, and it's an asset to the company. All right. And it's only passes through to the cost of goods when you actually sell it. And we'll talk about that a little more. A more advanced, more detailed chart of accounts might have your bank accounts, your payment services, cash, if any. Sometimes people have in a retail store, they might have a cash drawer. Okay, accounts receivable. This occurs for businesses that send out invoices. Okay, so the invoices get sent out. That is money that is owed to you, so it's considered an asset. Prepaid expenses, you've already advanced them, but they haven't been applied yet. So that money would come back to you if you cancel the service. They would give you that money back. So it's an asset. Inventory, and then your fixed assets like real property, furniture, fixtures, equipment, that sort of thing. These setting up your chart of accounts can be as small or minimal as you need for getting started, and it can actually be expanded if you need more charts or more accounts. Again, this is for you to decide what you need. All right. Most of the financial software out there will set a lot of these basic ones up for you. You can rename them so that they're meaningful to you. And you can also add more or simply not use them based on what your needs are. You just don't want to make it too complex, but you want it complex enough to give you good information that you as a business owner needs to know. All right, now let's look at liabilities. This is something that you owe. It's a debt. You have to pay it. They can be the bills for your inventory. They can be bills for your internet, your office space, anything like that. There also can be loans, and they can be the credit card expenses. So you'll see under the basic form, you see credit cards and sales tax payable. Those are just examples again. Yeah, and you may have others. And then you'll see a more advanced setup is going to be accounts payable, where you're posting what you owe, which I strongly encourage businesses to do. It makes it really easy to pay the bill. So it helps you to not double pay bills. It helps you to really keep track of them and knowing what kind of cash flow you have going on. Helps you to manage that better. Credit cards, payroll taxes payable. If you have a payroll, I encourage you to pay the taxes as you go rather than to try to let them build up and even pay them, even if they're only due once a quarter, pay them more frequently than that. Okay, unless they're really super small and you know that you won't have any trouble paying them. This is one of the places that gets business owners into real mischief. Sales tax payable, that's another one. Pay as you go. If it gets a really large amount, just go ahead and get it paid. And note payables, which are the same as a loan. It's an older term, but it is still one that is regularly used. So note payables, loans, things like that. Lines of credit, we may actually call it a line of credit. Equity. So this is the one that I was saying that business owners struggle with understanding. So the simplest version of it is it's the difference between what you own and what you owe. So it's the difference between your assets and your liabilities. So under a basic setup, you have your opening equity and you have your owner's equity and you have your retained earnings. So let's talk a little bit about the owner's equity. When I first started doing bookkeeping for companies, and this has been a long time ago, and when the software came out, I was really surprised to find out that the chart of accounts that was automatically set up by the software only included owner's draw. Now, that can be called a shareholder's draw, officer's draw, depending on the way your business is set up. So an owner's draw is the term that they usually use for a sole proprietor. Okay. And then a shareholder is typically for like an LLC, and an officer's would be like in corporations. They all mean the same thing. It's money that you take out for your personal use. Okay. It's not a taxable amount. It's what you take out for your personal use. What was interesting to me is that they didn't have one called owner's contributions. This is where you're adding money into your business. Most owners do. In the early days, they may not have enough cash flow to handle everything. And the first amount of money that they put into their business to start their business is an owner's contribution. It's not income. Income is only what you receive for the services that you provide or the goods that you sell. And this is an important understanding. So owner's equity includes money that you take out of your personal pocket and put into your business, and the owner's draw or distribution is the money you take out of your business and you put into your pocket. Don't forget this. This is the place that business owners really struggle. It's important that you have clarity on this. Retained earnings, fancy name that just means what is the net result of your business from day one? This month you had a loss, next month you had a gain. They add and subtract those, and that is the retained earnings. And it's based on year, day, month, week, whatever. It's just keeping track of it basically every time you put money in and every time you take money out, and the net result of that. So on the more detailed side, you'll see that you have opening equity. This is usually used for the very beginning, starting of your business when you're just getting started and set up. Usually your CPA will zero that out and decide where it needs to go, what it is, and that sort of thing. So you'll get some help there. Typically, that is not used after the business is more established. And then we have the owner equity, owner's contributions, the adds, owner's draw, the subtractions. And then because we regularly see people taking money out for their business, we might have an account for personal expenses. You don't have to have it to put it under draw if you want. And one that I see all the time is personal taxes. And if you're paying for income tax through your business bank account, it's a personal expense. It's not an expense to the company. And I like to see it in a separate account because it makes it real easy for me during tax season to go and say, oh, this is the amount of money that I paid. And I always say, well, it was for, it was estimated tax, or it was for the taxes due, or whatever, and what the year was. So I like to really see a personal tax account there, and then retained earnings. Okay, so remember that this is something that you may not just understand right at the get-go. Spend a little more time doing a deeper dive until you understand what equity is, the difference between what you own and what you owe. All right, this is the easier section for most business owners. Again, there's a lot of information here, and we can go through it fairly quickly. All right, so we have the profit and loss, income, what you get paid for what you do. Now, here I'm going to say something that makes it kind of, I hope, very clear for you. If you receive a refund for an expense that you paid or for some inventory that you bought, that is not income. That goes back to the account from which it came. So if you get a refund for some inventory that you bought, it goes into your bank account, and then it goes into the inventory account. It gets recorded there. So that's the double entry recording data entry that you may have heard about. The reason people who use QuickBooks don't understand double entry is because QuickBooks is, and that's a lot of the and all the financial software is doing all that double entry stuff in the background. But you need to know the account from which the money came and where it went to. So income is only what you get paid for what you do. Okay. So again, we're going to see basic revenue, services, revenue, product, and then sales returns and or allowances. This would be discounts or people that you had to refund. Okay. You can have this as detailed as you like, which you'll see in the more advanced list. Revenue services. Maybe I'm a landscaping company and I offer design services. Okay. I have landscaping services where I go in and I put everything in. Maybe I just have what I refer to the mow and blow, where people just come in, they mow your lawn, they blow off the leaves, they might do a little weeding, that sort of thing. Maybe I want to know exactly where my business is strong, where I'm making the most sales. It's good for me to know where I'm making the most sales. It also helps me to know if there's been a change in that, in what people are buying, so that I can adjust what I'm doing. And then under products, you can see I have things like pavers, fertilizers, and plants. And then I have the sales returns and allowances. You want this as detailed as serves you without making it so complex that it's hard to manage. You want good information so that you can make good decisions. Costs of goods. So the costs are still expenses, but they're directly tied to your income. And I'm trusting that once I go through this, it'll be a little more clear for you, because I get asked this all the time. What are costs of goods? So it depends on what you need to know and the way your business is set up. Typically, costs of goods are going to be the inventory, the products that you sell, It might be some direct contract labor that you have to pay for. Like if I have a design feature to my company, I may have to pay somebody else to do that design. And then I may charge a little bit more to my customer. And then they might be a direct contract labor. They could be an employee. I might even have that employee information and wages here. Merchant service fees. This was typically just shoved under bank fees. I like to see my merchant service fees up here under costs of goods so that I can really project what I'm spending there and know if I need to adjust the way I charge for things. So I want to know, today lots and lots and lots of people are buying with debit cards and credit cards and that sort of thing, and people are paying more. So you want to know, has that changed for me so that I know how to do my pricing and what I charge? The rule of thumb here, folks, is I know there are businesses that are doing an add-on if you use your debit card. I would say, generally speaking, don't. It's much better if your prices already have that built in because people don't want to pay the extra. They don't like the surprise. They really prefer knowing exactly what they're going to pay. So just go ahead and build your merchant service fees into your pricing, and then you would still keep it here so that you know what you're paying. And then you'll see the more advanced versions, products and inventory, materials and supplies for products sold. Maybe I need to track my freight because it's directly tied to my income, storage, maybe for the inventory, direct labor costs. This would be for employees who produce the products. Direct contract labor, this would be for your 1099 contractors or independent contractors that you're hiring to do certain things for your business. And then the merchant service fees. I don't remember if I said this. The IRS doesn't really care what you shove into this category. This category is for you, and it should be directly tied to your income so that you know how to do your pricing. This is your information, all right? If it's an expense, fine, okay? If it's a cost of goods, it's also fine. This information is for you to manage the financial health of your business. So expenses, this is probably the area that business owners understand the most, okay? So what it costs to run your business, whether you make money or not. And so even a basic setup is going to have a lot of different categories: advertising and marketing, bank services, computer expenses, contract labor, dues and subscriptions, insurance, internet, blah, 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 just a ton of stuff. The IRS says that basically anything that is relevant for running your business is a deductible expense or deductible cost of goods sold. All right. There are no hard and fast rules there. You'd have to be able to defend it if they challenged it. But generally speaking, if it's needed for running your business, then it's a valid and deductible expense. And I encourage you to really push that envelope. Let your CPA guide you on what maybe should not be included, and then go for there. And I think we're going to see that on the next slide. Okay, we are. So the tax returns typically only use advertising and marketing. However, that may not be useful for you. You may need to know more about what your website is costing you, maybe your social media marketing, what you're spending on networking events. So it's fine to have more detail under there. Make it useful, okay? Make it tell you something. Under automobile expenses, this is an area that's kind of gray, all right? If your company owns a vehicle, you're a corporation or an LLC, and you own a vehicle, or you have a vehicle that is a personal vehicle that you've said, this is for my company and this is how we use it, and we use this vehicle all the time and pretty much only for business, then you can use an automobile expense, track the fuel, track the insurance, track the repairs and the maintenance. Okay. If, however, you're using your personal vehicle, all right, then and it's not really only for your business, then the best way is to track your mileage. A really super easy way to do that is get a picture of your odometer in January and every January, and now you know how many miles you put on your vehicle, and then you can best guess, estimate how much of that was for business, how much of that was for personal, and maybe how much was for medical or charity work, because all of those things can be deductible, and mileage pays big dividends. It can actually pay better than an automobile expense, because if you've got a newer car and it's under warranty, you may not have a lot of repairs, okay? And so you'll just capture the insurance and the everything under the mileage feature, because the IRS gives you a very generous deduction for that. So again, then you have the very usual things. You have contract labor, dues and subscriptions. Contract labor, for that, generally speaking, it should be something that is not part of what your business already does. If I'm a bookkeeping business, I cannot hire another bookkeeper to do work for me and then not pay them as an employee. So contract labor is only for those things that are outside of the scope of what your business offers. And there's some nuances there. We'll not get into it right now. If you do a hiring help presentation through PACE, you'll get some more detail on how that works. So contract labor is outside of the scope. It could be a bookkeeper, for example, for if you're a landscaping company, you can hire a bookkeeper. You can hire someone to do your marketing. You can hire someone to do design work, those kinds of things. Otherwise, they're going to be employees. So licenses and permits. And one of the things that I like to do, if you'll see under office expenses, I have all the office expenses bundled together so that I know what my office is costing me. If I have two offices, I might identify them as, office A and office B, just so that I know what I'm spending on each one of those. Gives me really good, useful information. And I do the same thing with employee expenses. Everything that's related to employees, I have all as what they call subsets of a primary account. The benefits, my officer's salary if I'm a C or S corporation, LLCs can be taxed as an S corporation, payroll taxes, wages, and workers' comp. And it's real important to have, if you're a corporation, be sure your officer's salary is kept as a separate item. Again, it's very useful information to keep it separate from ordinary wages. It's fine to have your wages broken down by different categories, as well as to different functions of your business. So those can be in your cost chart of cost of goods, if useful, or they can occur here on your expenses, and then your workers' comp, and then some other things. And the travel, lodging, and meals is if you're traveling for the purposes of your business. So this is what a chart of accounts looks like. Okay, and your reports are going to be separate reports, and this is the way they're going to be broken down. Assets by their accounts, liabilities by their accounts, owner's equity by their accounts, and the same thing with the profit and loss, so that you get this information. Okay.
Lorna, we have a question. Is a
Sure.
subcontractor considered an employee?
No, great question. A subcontractor is typically the name used for an independent contractor, a 1099 contractor. All right. There's in California, there's AB5. There are most states now have it. It's the rules by which you can hire an independent contractor, and they do not need to be an employee. Example, I'm a landscaping company. I can hire a bookkeeper as an independent contractor. I can hire a marketing specialist, social media specialist as an independent contractor. Technically, your tax professionals are independent contractors. Okay. If, however, my business is to do landscaping, then I, in most cases, will not be able to hire someone to come in and do the work if it's the same thing that I do. the caveat there is that a landscaper, that somebody that can actually put the pavers in, they could be a licensed contractor. As a licensed contractor, you could hire them as an independent contractor to do the work. However, in this particular example, they have to be licensed. So it's a great question. Independent contractors are not the same as employees. All right. And there are very specific guidelines as to who will qualify, because you do not have to pay um, Social Security, Medicare, withhold income taxes, and things like that. And you have to keep track of them and give them a 1099 at the end of the year if you pay them $600 or more. So great question. Looks like we have a duplicate slide here that I missed. So, okay, so we're in really good shape. We're getting ready to do some best practices. So financially savvy business owners make more money. Bottom line here, folks, you make more money when you understand the financial piece of your business. Okay. You can confidently adapt to change. You'll stay focused better. You know what's important to you, and you create businesses that deliver on their promise of financial freedom. Okay. And the structures and systems for having and making money are super important. They're a major component of financial success, as are financial skills. So let's talk about best practices. Use accounting software. Okay, I do have one client that I set up years and years ago. He's a golf pro, and he doesn't use accounting software. He was in way over his head, but he agreed to always pull his bank statements every month, his credit card statements every month, and to prepare a summary of all the expenses and income that he had. Otherwise, use accounting software. I really like QuickBooks. QuickBooks Online is very usable. Learn how to use it. And we are going to have a QuickBooks class in January, a little, prelim on it. However, get started using it early in your business, because it will help teach you, and you will learn it, and you will get stronger at it. And so do it while it's easy and there's not a lot of information. Do it consistently, at least once a week, so that you're way on top of it. Okay. Set up a bookkeeping protocol and stick with it. That means, when are you going to do your bookkeeping? When are you going to make sure that your transactions are recorded and updated? Okay. If you get behind on your bookkeeping, get it caught up. I run into this all the time. They get busy, they've not taken good care of it. You have to get back to it. You have to carve out that time and make sure that you get focused. You may hire someone to help you to get caught up. The thing is, you know more about your business than anybody else. Even hiring a bookkeeper, they're going to have tons of questions. So keep up with it. And if you wait too long, you're going to forget. You're not going to remember what a purchase was for. You may not remember who paid or where the money came from. So I encourage you not to get behind. Again, this is not a sexy part of business unless you really enjoy the numbers part, which I happen to. But don't get behind on it. And if you do, get caught up. Reconcile your bank and payment service and credit cards monthly. Even with a bookkeeper, they must be doing a hard reconciliation, comparing the statements with what you have recorded in QuickBooks, okay, or whatever financial software you're using. You must reconcile these accounts. This is where people make the mistakes. They double entry, they may double up income, they may miss income, and they may double expenses, or they miss expenses. You want to be sure that you're reconciled based on what the statements show. Keep your commingling of money to a minimum. Have that separate bank account. Have a debit card that goes to that bank account. Use a credit card that is only for, or mostly for, business purchases. Don't commingle your information. It really creates a lot of headaches for you, and in the long run, it could really reach around and bite you on the ankle, because the IRS may disallow some expenses, saying that you didn't take good care of them or didn't identify them carefully. Okay. Learn bookkeeping basics for yourself. As the CFO, you are always responsible for the accuracy of your books. You're the one signing your tax returns. You need to be sure that those tax returns are correct. You need to learn how to read them. They're not hard to read. Okay. At first, you think, you see, I have a client that gets 99 pages of tax returns. It just blows her mind. But once you start looking at just the first few pages, you can match those up with your income, profit, and loss statements. And you'll be able to see how the CPA or tax professional posted it. And then you'll go, oh, that's correct, or that's not correct. The more you know about that financial side of your business, the better you will be at protecting your financial future. Okay. Nobody else cares about your financial health but more than you do. And nobody knows more about your business than you do. Okay. If bookkeeping becomes more than you can do yourself, and or will do, okay, then hire help. Hire help. And lots of bookkeepers out there are very good at what they do, and they'll be happy to sit down with you and explain everything. You're the CFO, you should understand everything. If it doesn't make sense, it needs to. If you're a small business or startup in the very early stages of your business, monthly bookkeeping should be enough. The golf pro that I was referring to, his stuff is very predictable. All right, so it's really easy for him. He writes down when he's received a payment, he gets it deposited. He just throws the expense receipts in there, or he pulls them off of his reports and he writes them down. So monthly bookkeeping should be enough. So where do we focus? We focus on revenue and the delivery of services and products, and we do that every single day. And just make sure that we have a system in place that allows us to get this information all bundled up one time a month. Put it on your calendar, make sure that you're doing it. If you're a more established business or struggling with cash flow, do your bookkeeping weekly. If cash flow becomes problematic, use a weekly cash flow dashboard, and those are in further other Bootcamp presentations, but they're fairly easy to do. How much money do I have coming in? What do I need to pay for? It doesn't have to be complex. Put it into like an Excel type document and manage it that way till you really get a good grip on it so that you understand. It can be kind of scary at first. Once you get to doing it, you'll find that, oh, it's not as bad as I thought. And if it is really terrible and really hard for you, get some help. Hire somebody to help you walk through it. Make an appointment with somebody at Pace or with a bookkeeper, and sit down and really get this figured out for yourself. But this is where it starts. This part of this training today. If you have an in-house or third-party bookkeeper, be sure you receive timely reports based on your needs, always, at least every month. If you have an in-house or third-party bookkeeper, be sure you review your bank statements and accounting software for compliance every few months. All right, make sure that they're reconciling the accounts, make sure that everything has been properly cleared and that you're seeing stuff on your bank statements, okay? Put getting your reports on calendar and review no less than monthly. And these are the reports that you should be seeing. Your balance sheet in accrual basis. Accrual means it'll show everything. Okay. A profit and loss in accrual and cash basis. So accrual basis shows all of your invoices out, all the money you expect to have in, and the cash basis shows what you have actually paid out and what you have actually received. So they're a little bit different. They're used differently. And next month, we'll talk a little more in detail about what that is. A balance sheet transaction detail, cash basis. I really love those for business owners. Just scan it, look to make sure you understand and recognize all the transactions. The same thing with the profit and loss side, a transaction detail cash basis. It shows you all the names of everything that went out and everything that came in. Really useful for you to pay attention to that. And then a 6-month or year-to-date by month report so you can see changes. Okay. Okay, we're ready to wrap this up pretty much. So next month, we're going to do a financial statements review. You know, this is the stuff that no one ever taught you, and you still need to know it. Okay. And then coming in January, we are going to have a QuickBooks training. It'll be on a Tuesday and a Thursday. They'll be pretty much back to back. So, and they're 1 hour each, so that you'll start getting some fundamentals for understanding your QuickBooks if you're in that early stage of your business and you want to get set up. So, some kind of accounting software is super, super important for your business. It makes it easy for you to do. You cannot run $1 million business in today's world with a pencil and paper. It takes way too much time. Okay. You're not going to do it well in Excel. It's going to get hard. Use some kind of accounting software.
So Lorna, we've been oh, I'm sorry.
That's
Please
all
do.
right. So I'm going to back up. Let me just finish these last 2 slides and then we'll start answering questions. Okay.
Okay, okay.
Okay. So this is a gift from me to you. The traditional perspective for building a business has missed that business systems, structures, and skills are simply not enough to get us over the finish line to financial freedom. In fact, while they are absolutely necessary, they are only about 50% of the success equation. I want you to know that to achieve financial freedom, a business owner must need to transcend limiting beliefs about money. They need to really embrace positive, empowering beliefs that support and making having money, because these are essential if you are ever to win in business and win in life. So there is a free ebook for you. It will be, the link to it will be in your handout, which I will prepare after this workshop, and we will get that over to you. And I am ready to answer questions.
Okay. So we have a few sets of questions about selecting an accounting. So, as was stated, are all accountants created equal? What's the best way to find an accountant uh, 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 adapt at helping a small business grow?
Well, that's fantastic. So your CPAs are certified. They're certified accountants, tax professionals. They pay attention to, just preparing tax returns. That's all they do. Okay, they typically are very adept at helping small businesses, and they're affordable. The CPAs are typically more expensive. But to answer the question very specifically is you talk to them. You go in and you meet them and you kind of see how they talk to you. Okay. If they're only interested in doing your taxes, if they just want you to get your reports to them, you're going to get a sense right off the get-go that they're only interested in doing the taxes and getting paid for it. They're not interested in helping you grow your business. However, if you meet a CPA that is, let's say, friendly and relaxed and asks you how your business is going and do you need any help, then they're going to be more interested in making sure that they're going to educate you as you go. So maybe you'll do your first meeting with them and you'll get your taxes to them, your data to them. And they will guide you on things that are not deductible, or how you can better your deductions and that sort of thing. Ultimately, all tax professionals and CPAs are interested in saving you taxes, and that is how you know that they're interested in your financial well-being. If all they do is take your information, plug it into their software, and send you a bill, they may not be a fit for you. So ask around, ask your friends, get familiar with them, see who they like. I will tell you that a lot of women are more comfortable with women CPAs. Not to say that men CPAs don't do a really good job. I just find that sometimes women, particularly in the people-centric industries, okay, feel that they get better treated by women CPAs. However, again, I cannot stress enough the importance of you understanding the financial information for your business. All right. Get educated there so that you know when you're talking to the expert in taxes whether it's right. And then be sure to look at your tax returns. If you feel like something is amiss, then something probably is. Trust your instincts. business owners have great instincts on this. So ask around, ask your friends, see who's got good reviews, see how they treat you and how they talk to you. Okay.
Okay. I think you, by answering that, by saying that you answered the second question, which was related. So where's the best place to locate a bookkeeper online or on a contract basis? So it sounds like word of mouth is what you're,
Yeah, so ask your business associates at networking events, pay attention to account bookkeepers and such that are out there looking for work, but I would ask around and find someone. They're out there. I did see the other day someone said they were looking for a bookkeeper, and I just kind of jumped on LinkedIn, and there were like 30 businesses looking for bookkeepers. They're out there. Plan on paying well. Today's going rate for a qualified bookkeeper is not going to be any less than $35 an hour. Okay. And you're probably looking at 45. For an in-house bookkeeper, it's still going to be $35 an hour. Okay. You're going to really be hard pressed to find anybody less than that that's really competent. And just see how you feel, but pay attention to your books even after hiring the bookkeeper. So those are good questions, and that's where it's at. Ask around, look for people that you know, like, and trust, and see who they're using, and just call them and see if they're taking new clients, and then pay attention to how you're treated and how good they are at keeping their agreement to get your books to you back in time and timely, and they're being taken care of and reconciled and all of those things. So great question. I do
thing.
see a question here. It says, if I buy a truck for business, but it's not under a company name, is it possible to get a tax break? Yes. Yes, you just identify that that is an asset to your company. You get it added to your assets on your balance sheet. All right. And then your CPA or tax professional will help you do the depreciations for that over time. So yeah, no, it's fine. But it's on you to say, hey, this truck is for my business. This is what I use it for. So that if the IRS was to ask, you would say, yeah, no, this I use it only for my business. That's what it's for. Okay, great question. What else do we have in there?
There was another vehicle related question. So the person asked, if they spend $10,000 in fuel on the vehicle, that they use for transporting customers, but they put in 45 miles a year, should I go by the miles or the fuel on taxes?
So this depends on how you're using the vehicle. All right. And look at it. So just jump on the IRS website and see what the current rate is for mileage. You cannot switch back and forth if it's a personal vehicle. You can't one year do mileage and the next year do, repairs. You're going to have to say, well, then I'm going to just do mileage only for the personal car. If in fact, though, it's a company car, okay, or a business car or vehicle, and you use it only for the business, and let's say it's under warranty and you don't have a lot of repairs, then you have to kind of look to see, well, what am I paying for the insurance for that? Is it useful for me to do the fuel insurance, or is it better for me to do the mileage? Do a little homework on that and decide which one gives you the biggest bang for your buck, and then live with it and stick with it. So great question.
The person added that the vehicle is only used for business.
So you might check with your CPA or tax professional. I would have you do that research. What are you paying for insurance per year? Okay. What are you paying for fuel per year? All right. What did you pay for repairs? And then look to see how many miles you put on it and what that amount would multiply out to. You take the mileage time the allowance for the IRS allowance, and you look to see which one gives you the best deduction, and you go with that. And then that won't go into your books. You'll just have to bring that to the attention of your tax professional. So you can keep it in your books, what you're spending on it, and then you can deduct it as the mileage instead. But once you kind of land on which one you want to use, you'll have to stick with it. You can't change back and forth every year.
Okay. And then regarding expensing meals, cocktails, entertainment for meetings, what advice or best practice should they follow?
The best practice for that, I like to use that networking expense. So don't abuse it. The thing is that it used to be that there was a category called meals and entertainment. The IRS came to really hate that, the way people were using it. And they said, you know what? We're not going to allow that. We're going to allow 50% of that. So if you put all of those expenses under meals and entertainment, your CPA will divide that in half, and that's all the credit you'll get as a deduction against your taxes. If, on the other hand, your position is that it's all a networking expense, okay, and that's the only way that you use it is for networking, and you don't put any personal meals kind of things in there, that's a really great place to handle that. Because if that's your sole purpose to be there is to meet with clients and the networking, then put it there. I would like to point out that if you're buying drinks for somebody else, alcohol, and they're in a car accident, okay, you have incurred liability for your company and a headache you just don't need. Okay, that's a best practice. Walk away from alcohol as part of your business activities. And because it's just ultimately, there's this huge risk for you. So I'm glad you included that in your question.
Um,
What else?
Back to the vehicle, someone asked, what if you're leasing the vehicle for the company?
Same thing. Same thing.
Okay.
So um, leasing, if you're leasing the vehicle for the company, and in today's world, we're still seeing that people aren't driving as much. So again, do I want to take that lease and deduct the entire amount of the lease, which in most cases is so high that it's useful? Okay. Or do I want to do the mileage? Becomes a really good question for your tax professional. So you keep track of all the information. And then the first time you go in and have your taxes done, then you have that conversation, and your tax professional should be very forthcoming in telling you exactly what the best tax strategy is. So great questions. Those are very specific tax questions. Now you at least know the question to ask your CPA. And there's no reason, if you've got a CPA already, just give them a phone call or send them an email. Ask your question. What's the best practice for me? What's the best strategy for me from a tax conversation? Because that's their business. That's what they know how to do well.
So we are at time. Lorna, we have about 3 more questions. I won't take any more, but these are questions that are still pending. Would
I'm
you?
good. I'm fine.
Okay, good. Okay. Can you hire an independent contractor to do in-home services for your clients?
Ooh, there's a tricky one. So I'm going to say be very, very careful with that and really research, the AB5 with regards to that. If your business's purpose, advertising, and function is to provide in-home care for your clients, then hiring an independent contractor is probably not allowed. You'd have to really check that out because the rule is very industry specific. But I would say that you're right up against that edge where, what is my liability here? If I do it that way, then are they really an independent contractor? The purpose of AB5 was to say people are trying to keep from hiring people as employees so that they don't have to pay the employer taxes. Okay, Social Security, Medicare, and a few other things. Okay, and so we're going to lean heavily towards the employee. So if an independent contractor doesn't work out and you let them go, they might file to the EDD in California, Employment Development Department, and say, hey, I was let go, I'm due unemployment. And the EDD will say, well, no, that company never reported you as an employee. And now you have a snake pit to deal with. So research this information because it's industry specific, and that's going to be one of those things that maybe you should talk to an attorney about. The thing is that if you're really close to that edge, okay, and you are not protected by the specifics that you will find in this AB5, okay, it's on the California website. um, you need to make them employees. You need to make them employees because the EDD is not going to play nice about this. That's exactly why the rule was created. So I hope that that helps. You sound to me like you have some more research to do. Um, Make sure that you're well set up to prove that they're an independent contractor and that you're in fact in compliance with all of those rules. And I see something from Xiomara Palma regarding independent contractors. So I'm trying to see what else it says. Right. So she has provided a link to the labor code. Okay. The ABC test. This is something you're going to need to know. And there are folks at Pace that can maybe answer those questions for you. However, you need to be sure that you know that exactly how your business is set up and whether these are going to be considered employees or whether you can consider them independent contractors. So great question. It's one of those that is you're going to have to find out. So what else have we got?
Okay. I also wanted to add that Lorna had previously done a webinar for us on 1099 versus W-2 employees. You're welcome to check out the e-library and get her full, a comprehensive 1 hour discussing that topic. Okay, so someone asked that they were confused regarding assets, equity, and COGS. Their business is business service only. They wanted to know what's the best way to try to understand like assets, equity, and COGS. Yeah.
Okay. So service businesses don't really have a lot of COGS, costs of goods sold. So think of it in terms of the merchant service fees. If you get paid and they use a PayPal or something like that, you pay a fee for that. That fee can be considered a cost of goods sold. It doesn't have to be. You can just you can just run it through expenses if you want. I like to see it under cost of goods sold. You may not have any other costs of goods sold. That's fine. A lot of service industries do not. Okay. So one of the things is sometimes for small services, I'll advance fees for filing a form for somebody. So I put those under cost of goods sold because I advance the fee and they will pay it back. So then add more to the question if I didn't answer it carefully.
No, no,
Okay.
you did.
Okay.
I think that was good.
Okay.
Continuing about the car. The car is a big topic. So if I car, okay, if the person has a car, but they use it 90% for the business, should they put the car in the corporation name?
So first, to protect you from liability at all times, you must have adequate insurance. And if you put it in the corporation, you would need to make sure that the corporation is named, all right, as as the insured, and that you're also named as an insured, so that you have an insurance card showing that it's not just you. Okay. Um, Typically, what people do is they do not name the vehicle in the corporation. However, you can. If you say it's 90% for the corporation and you have a corporation or an LLC, then you can have the corporation on the title. The thing is that most car dealerships don't do that for you. That would be something that you would have to make sure happens. So it's a process. You say, oh, this is the best advantage for me. So I would say, again, this is a great question for your tax professional as to what this is, but it's actually more of a legal conversation than a tax conversation. So I would say, um, talk to your insurance people, see what they have to say about naming it in the business, how willing they are to provide you the insurance that you need for it. And you don't do it for a sole proprietor. This is only if you have a corporation or an LLC. Sole proprietors, you do not really have the way of changing the title. There's nothing to change it to. It's in your name. That's not in the company's name. So I hope that helps. Yeah, there are usually a lot of questions around the car situation, and it's stop and think about it based on the information that I was provided to you today, so that you can kind of go, what might be the best strategy for me? What's going to be the most work? Do I need to name it into my company? Um, does that really work for me? Do I really need to do so? Or do I need to just identify it that it is owned by that and add it to the assets and track it through the company? And that could be a question for your CPA. I don't think it's a problem. I don't know that you have to title it, meaning change the paperwork that shows that it's owned by the company. However, C corporations do that all the time. They do that all the time. S corporations, it may not be as important. So ask around a little bit more. Ask your tax professional. Um, ask, your insurance people. That'd be a great place to start to get those answers to those very specific questions for your company.
Okay. So we have a very specific question regarding a notary business. So for example, it's three questions, but I think they're very similar. So regarding the cost of goods sold, does that include notary supplies, the cost of a bond, E&O insurance?
Oh,
Is that included in the cost of goods if it's a notary, which is a service industry?
so great question. Here again, it's, do you need to know that information? The difference between cost of goods sold and an expense is that an expense you will have whether you make any money or not. So if I answer the question about the E&O insurance, I would say, well, you have to buy the insurance to be a notary. And whether you make any notary signatures and get paid for anything, you're still going to have that insurance. So that's going to be an expense. However, if I want to know what it's costing me to be a notary, then I'm going to shove that into cost of goods. So it becomes very specific that I can see what the costs associated to my notary service are. And if I look back after a year and I see that I'm paying a ton in insurance and I made 2 sales, maybe I want to not add that service as something that I offer. However, maybe it's kind of an add-on or brings people in. Then fine, you keep it. It's just a way of measuring. It doesn't matter whether it's a cost of goods or an expense to anybody but you as the business owner. It can be in either place. And I hope that helps because that's the distinction. Is it something that's useful for me to know for pricing and for business management and financial health? Great question, because it allowed me to get a little extra nuance on how that works.
So that's it for all the questions. There were some
Perfect.
questions, but it was kind of hard to understand exactly what the question was. So, but please feel if we didn't answer your questions, please feel to email me and also email Larna,
Yeah.
just so everybody has that information. Oh, Laura, do you have something? Yeah, go ahead.
Pardon?
Okay. Oh
No,
no, I
just
wasn't
the
sure.
last slide that shows my phone number and my email. And so if you feel that there was something, the burning question that you still needed to have answered for yourself, just email me. Tell me where you're from because I get a ton of spam. So you just have to say, saw your PACE, presentation, have a question, and you put that in the subject line, and then I'll get right back to you, and I'd be happy to do that. So that's my email, and happy to answer your questions for you.
Okay. Well, thank you, Lorna. I can see by the Q&A, I mean, hopefully the audience can also see your wealth of information, how knowledgeable you are. Okay, somebody raised their hand.
Okay.
Let
One
me
last
see.
thing. What do we got going?
Okay, so it's Linda. I saw that you raised your hand. So Linda, I'm gonna allow you to talk, okay? We won't know until you start speaking. So let me see. Okay, actually, she lowered her hand.
Okay.
Ezekiel looks like okay, so I couldn't get it. I'm asking him to unmute, but nothing's happening. Ezekiel, you have to unmute yourself.
Um, greetings and salutation, everyone. No, I have no
Uh,
questions. I was just giving thanks for the valuable information and much gratitude. That's it.
Oh,
thank
okay.
you,
Well,
Ezekiel.
thank you very much. Yeah.
Correct.
Yeah, thank you. It's my real pleasure to help you. There are more than 35 million small business owners in the United States. That's not counting those 1% giant mega corporations, 35 million business owners, and you guys are out there making a difference every day with the services and products that you provide to people. You're making their lives better, more valuable to them. You're doing a great job. And I really want you to succeed. And to succeed, this is one of the pieces that you must have in your toolbox. You've got to know this piece of running your business. And I'm glad you found it valuable and useful. This is the place that you start. And I can't say it enough, is that savvy business owners make more money. You need to know this stuff. So my real pleasure to help you with this, and hope that you will all sign up in December, and be sure to check out my little ebook that I put together for you.
So all participants today will receive a copy of today's webinar recording along with a copy of today's PowerPoint presentation, and of course the link to the free ebook that Lorna has so graciously given it to us. Oh, don't worry, if the link doesn't work, it's okay. We'll send it to you in the link in the email that I sent, so don't worry about that. And then also, please join us on December 10th for part 3 of this 3-part series. So we're going to wrap up the series. But hopefully, having attended all 3 workshops, you have a comprehensive overview how to manage your finances more effectively, which is one of the primary goals of Pace and Pace Business. So thank you everyone for joining us, and you all have a wonderful Thanksgiving holiday with your family and friends. And thank you, Lorna, for always giving us the best presentations, and we'll see you in December. Thank you, everyone.
All right. Thank you, everyone. Have a great Thanksgiving.